brokerage fees, fees to the SEC, to the NSE. What bothers investors most, inflation or exchange rate?
Well, both of them have direct effect on the level of investments they're able to do. If FX risk is a problem, if you see a spike in the exchange rates, it means that they have lesser and lesser monies to be able to deploy into investments and savings. And that also feeds into what they do with inflation. If the food inflation index is still up, it means that they're spending more and more on what they consume rather than save and invest. So both of them have direct impact on how they invest, particularly to the equities market. And I think, like we've clearly pointed out, until we see a major reduction in those key elements of their cost lines, then, of course, for them, it's just another data coming out of the NBS.
Of course, you're speaking here in the studios, and folks are online, and they're already reacting to this story. This inflation, and one of them, Adidaya says, base effect, sharp decline, but don't be deceived, month on month, still raging. And that's the figure he's talking about here. That on month on month, the headline index increased by 1.88%. That is between end of April and the end of May, almost 2% to the north on inflation. So he says, don't be deceived. The baseline effect was talked about by financial derivatives about what exactly is the base effect. I said there's a backdrop of waning base year effect. So the base year effect looks to be tapering off gradually, and perhaps food inflation would actually may come back and hurt these figures that is declining moving forward.
Absolutely. That seems to be the reality on ground, because if food inflation keeps uptrending the way it is, then at some point it nullifies the effect of the base effect that we've been talking about, because that is winning. And as soon as it wins, the reality on ground becomes the food index, which is a major component of the inflation number, and that can be a problem.
Food. Okay, let's talk about food a little bit. Folks, and this is what the selected food price watch for May released about 30 minutes ago by the Bureau of Statistics. Average price of 1 dozen of agric eggs, medium size, year on year up by 41.27%, month on month by 0.78% to 522 naira 71 kobo in the month of May. Average price of medium price egg, that's the price. Average price of 1 kilogram of tomato decreased year on year by 13.04%. But increased month on month between April and May by 18.9%. And of course, we all know what happens during this period, the fasting for the Ramadan and folks making. So the price has gone up. So average 1 kilogram of average. So don't say bosun, well, that's not what it sells in my area. But the average price is about 339.72 naira, 339 naira 72 kobo. And the average price of 1 kilogram of rice, imported high quality, year on year, that price is up 29.58%, month on month, 5.69%, 410.55. And of course, yam is also increasing.
Until we do something about cost of transportation and of course power, we would continue to see this being a problem, and it will continue to cloud down the effect of the base year, like we've pointed out. If people are not getting food cheaper, if we're not getting enough to boost local production of food, then of course we would have challenges with this, and that's the reality we have to deal with.
In terms of how you relate to investors and their concerns about the market, how much of the main economic, macroeconomic, microeconomic situations are their main concerns as to, hey, you have 100,000 naira portfolio, why don't you just add another 50 or maybe another 100? And what's the reaction of Nigerians, basically retail local investors?
Well, you realize, Bosun, that until we had the FX challenge sorted by opening the special window for FPIs and exporters, there was a sort of nonchalance to the market. Local investors were saturated about how they wanted to invest. And so until we had that segment of the economy sorted, we didn't see an influx of investment or investment interest into the Nigerian market. So the macroeconomy is a key determinant of how this market plays out. So it is really important for both the local and foreign investors to be able.
The market has been doing a rally with about 25% today. We're the poster boy for the African stock market. Not even the South Africans come anywhere near where we are at the moment. So, have you seen local investors coming back into the market, or is it still largely a foreign play?
No, a lot of the local investors are coming back into the market, and that's why you see the effect of a bandwagon investing pattern crystallizing here. You're seeing investors from the diaspora or foreign investors investing in particular companies, and when they've taken those companies to areas where the local investors feel it's out of their reach, they begin to look for the next big thing. So
where are they investing? Where are local retail investors? What are they buying?
I'll give an instance. If you look at the banking segment, a lot of the foreign investors are focusing on the tier 1 banks because they think that that's where they've seen and spotted value. But the local investors, even though I think quite a lot of the tier 2 banks are okay, are decently priced, and can still have a lot of room for upside, I think a lot of the challenges are things that the local investors are not paying attention to. So they are investing based on the fact that these foreign investors are taking up the spaces in the tier 1 bank, and they are looking at the tier 2 because, well, comparatively they are cheaper in terms of absolute valuation and not intrinsic value.
I'm seeing very strong, we're also seeing very strong buying and activities in the consumer and the industrial goods. Is it that folks are beginning to sniff around and see, oh, hold on a second, if 7.5 trillion naira estimate budget is coming on the street, that's a lot of money. I can make some money with the sectors and the companies in that space.
Absolutely. For the industrial goods segment, I think the fact that we've had the budget passed and signed into law is something that would give a boost to that segment. We would see a lot of investment in infrastructure, and that's an area where people like Dangote and Julius Berger will probably leverage on to be able to improve on their business. But for the consumer goods, I think the major catalyst for the resurgence in that space is the fact that we are seeing a considerably lesser input cost from them, because a lot of their input costs are imported and they are exposed to the FX challenge has been alleviated to a large extent.
Is the magic wand.
Yeah, it's the magic.
Thank you for coming. We appreciate that. For coming into this today. Chukuma Anyanwu, the head of research at GTI Securities. The specter of inflation, consumer inflation and the local commodities market. That's what we're discussing next after the break. You've heard the prices. We'll get back to it with Ada Konobi from Financial Derivatives Company.